Hi, I'm Miss Stock. Silver market breakdown. Something is very wrong. Silver didn't just dip. Silver crashed 28% on Friday, wiping out trillions in paper value across derivatives, miners, and leveraged exposure. And here's the part that should make everyone pause. JPMorgan closed its silver short position at the exact moment price hit the bottom. Not minutes later, not roughly around there, at the low. That alone tells you this wasn't random. A COMEX report shows JPMorgan closing its silver short around $78. Now look at the move. Silver topped near $121, collapsed to $74, then stabilized right around $78. That's not noise. That's precision. Now connect the dots. On December 2nd, 2025, U.S. banks were holding 17,838 silver futures contracts short. That's about 89.19 million ounces. At $121, that's roughly $10.8 billion in short notional exposure. One number explains the entire cascade. This is the same structure we've seen before, in equities, in commodities, and especially in crypto. The playbook never changes. Push price higher to pull in leverage. Liquidity thins, dump into weakness. Stops get clipped, longs get liquidated. Panic spreads, shorts cover into the chaos. That's not price discovery, that's flow control. And history matters here. Between 2008 and 2016, 5 major banks were caught criminally rigging precious metals markets. These weren't theories, they were proven cases. JPMorgan, $920 million fine 2020, admitted wrongdoing. Scotiabank, $127.5 million fine 2020, fraudulent trading. HSBC, $76.6 million fine, spoofing, 2011 to 2020. Deutsche Bank, $75.5 million fine, market rigging, 1999 to 2014. Morgan Stanley, $1.5 million fine, spoofing, 2013 to 2014. Regulators eventually caught up, with convictions and fines still being issued as recently as 2025. So when we see another violent, perfectly timed collapse in 2026, people are right to ask questions, because this looks very familiar. And now trust is breaking. Investors don't know where capital is safe anymore. Look at the flows. Dollar dumping, gold dumping, stocks dumping, crypto dumping, bonds pumping. That's not normal rotation. That's capital hiding. I've studied macro for over 10 years, and I've called most major market tops, including the October Bitcoin ATH. When something breaks structurally, price tells the story before the headlines do. I'll keep digging. I'll keep posting updates as the data comes in. And when I fully exit the market, I'll say it publicly, like I always do. A lot of people are going to regret not paying attention earlier. Follow. Turn notifications on. I post the warning before it hits the headlines.